Hello everyone, welcome back to Altrady. This week has been a true roller coaster for all global financial markets. Not only the crypto war was shaken, but stocks, index, forex, commodity, bonds also experienced one of the most intense weeks since 2020. The reason? A disruptive geopolitical shock. Former President Trump officially introduced unilateral tariffs on all countries with a trade surplus against the United States, only to suspend them for 90 days. A drastic move that caused turmoil across all markets. The result, a widespread crash. Traditional markets dropped 10 to 50%, and the crypto war was hit by a wave of sell-off. Now, however, the market is attempting a rebound, but be careful, this isn't a healthy bounce. Volume is low, price action is fragile, and many analysts are already calling it what it could be, a dead cat bounce. But there is another element that shouldn't be underestimated. April marks the beginning of the new annual cycle for institutional investors. And this could bring fresh capital flows and strategic positioning that change everything. Let's start with Bitcoin. On Sunday, it dropped a heavy minus 6%, testing the key support zone around 77k. Monday opened in panic, a violent breakdown, long red candle, but then a last-minute recovery. The day closed with a plus 1% right above that critical level. Tuesday closed back in the red, followed by an incredible recovery on Wednesday with a plus 8%, pushing the price back above 82k and erasing the entire previous move. Now let's go with Ethereum chart. Ethereum, a much more delicate situation. It broke below the 1755 support with a minus 13% plunge. A minimal recovery followed, but the price still remains below the breakdown point. Ethereum is showing structural weakness, and we have returned to the March-July 2023 levels, where the last bull run has started. Solana charts. Solana, on the other hand, is more resilient. It broke below $115.8 with a significant bearish candle, only to bounce back into the support area. Price action is cleaner, more structured. It is seeking an accumulation zone at key levels, a signal that, if confirmed, could restart the trend. Ripple charts. Ripple is very similar to Bitcoin. A breakdown followed by a fake out with an impressive long shadow. Now the price is fighting to stay above the critical $2 level, try to consolidate in a key zone. What we are seeing is a deeply uncertain market with a high volatility and strong dependence on macro news. The fear and greed index is still stuck in fear, and every day feels like a roulette spin. We are in a crucial phase. The next move could change everything. Stay sharp, traders. The coming weeks could mark the start of a new phase or a continuation of the correction. Follow Altrady to always stay one step ahead of the market. That's it for today, folks. Subscribe to the channel, drop a like, and let me know in the comments. Are you buying the dip or still waiting? See you in the next video.